Silver's more industrial. People want to use it in industry more, but you're seeing that investment demand come into gold and silver to grab that gold and silver out of London, to grab what it can. They're pulling forward demand in gold and silver physically on the Western markets. Of course, in last week's video, we looked at Shanghai and how incredibly frothy that's got. Hey everybody, this is Rob Kientz with goldsilverpros.com. This is your weekly market wrap up for April 28, 2023. We're recording this about 12:30 p.m. Central Time, and the title of today's presentation is Gold Holds Steady as the U.S. braces for more bank collapse. That's right, First Republic is going to be back on the news, and we're going to talk about that. But first, let's get into the economic data. It is critically important that we talk about what's going on in the economy. There are a lot of things going on in the economy, and we're going to start with the economic data as we typically do. We're going to start at home data. A lot of that came out on Tuesday. The Case-Shiller Home Price Index is up 0.4% year over year. That's a very modest increase, but it's still positive, meaning home values have not gone down this past month. New home sales were up to 683,000. That's 60,000 more than last month. However, the existing or pending home sales is down 5.2%, and it doesn't look like overall people are going to be buying as many houses. Even though we've had a little plateau in the housing market now where prices are holding steady and we have some sales, it looks as though a lot of those pending home sales are starting to fall apart. That is a credit issue, I believe, and a payment and an income issue. We look at consumer confidence. It's over 100 at 101.3. That's a decent rating, less than last month at 104. So as we can see consumers start to come under pressure, that's also reflected in the news around homes, which is big ticket purchasing. We've already seen the last 6 months, automobiles have been sales have been challenged. Now we're starting to see it in the home sales the last couple of months. The consumer stressed. Durable goods orders are up 3.2%. Durable goods are those things that the economy needs, that people need, and that businesses need. Waning investment, however, is setting out bad vibes for the economy, according to the article from Market Watch. Overall, retail inventories are up because even though we're creating stuff, people aren't buying quite as much. So we have a little bit of inventory stuffing. GDP has come down. That's the big news. GDP has come down to 1.1% for quarter one. 1.1%. That's still positive. It's not recession territory, but it was 2.6% last time around, last quarter around. And so it's definitely fallen. Analysts believed it would fall to 2%, but not to 1.1. The GDP print is half of what analysts believe and almost just slightly above a third of what it was over the previous quarter. We are slowing down the economy. Everything we talked about with the data has said it. And now that GDP print comes out and confirms it, initial jobless claims are still high at 230,000 and continuing jobless claims at 1.86 million. And employment cost is going up at 1.2%. So labor is getting a little bit more expensive. Jobs are getting harder to find. We're seeing some rollover in real estate. We're having some too many inventories, and we're also seeing GDP fall. That is a sign of a slowing economy. A couple of articles to talk about. According to the Kansas City Fed survey, the Fed runs different surveys. One of the quotes from that is, inflation is killing my business. Small business owners are being eaten alive with inflation. Here are some quotes. We need an incentive for people to work. We have 10% increases or more in cost of materials. We have 7% increases in cost of labor. We've raised prices 5%, can't do more. People won't buy. Hard to make money this way. Margins are getting squeezed. Retailers cannot raise prices over a certain amount. The consumer's not buying, but their costs are going up more than they can raise their prices. It says here, inflation is still a big problem in our little corner of the world. Some commodities are better and some are still a problem. We're likely looking at another round of significant price increases in the short to medium term. Another quote, we're seeing a little slowdown of sales in certain types of consumer products, so become a little bit more conservative in production plans for 2023 and 2024. Labor availability is the biggest challenge we're facing, one respondent said. Inflation is killing my business. Everything is up and hard to get my price increases passed along to customers. Employees are getting very hard to find. So businesses really are suffering not only on the prices, but also on labor that they need to expand and to increase, and they're having a hard time. U.S. pending home sales, as we mentioned before, plunged in March as rates rebounded. As rates went up, pending home sales started to fall, but deals fell through because as rates are going up, people having to pay more. They can't afford that house. So they're not buying as much house, or they're not buying as many houses. We're starting to see that rollover. Overall, the economy is doing okay today. The Dow is actually up. The stock markets are up. Dow's up 250 points to 34,074. S&P 500 up 30 points to 4165. NASDAQ up 56 points to 12,198. And the Russell 2000 is up 20 points to 1771.77. not doing too badly, although the bond market is a bit of a different story. As we go and look at bonds, we're still seeing 5% rates on the 2-month, 5.119 on the 3-month, the 4-month is at 5.2, the 6-month is at 5.052. High interest rates on the immediate or the short end of the curve means people see oncoming recession very clearly. The data is telling us that as well. The benchmark 2-year has fallen to 4.054, so it's still over 4%. That's not killer for the economy. It's bad, but not killer. So if that one stays right at 4%, that's not too bad. I think it's going to go way up. The 10 years at 3.454. We're still in yield curve inversion between that 2 and 10 year. People are still demanding a lot more interest, a lot more return on that shorter term debt than the longer term, which means recession indicator. People think the recessions are coming. What about the cryptos? Well, cryptos have fallen. Bitcoin got up to 30, fell back down to 28. Now it's at 29,202. It's fallen $505 today, although it's up from where it was not too long ago. Ethereum fell 34 points to 1888. Litecoin fell 0.92 to 8905. XRP is relatively unchanged as it typically is. And overall, the cryptocurrency complex is selling off just a bit. Gold is doing pretty well. It's hovering near its all-time high, about 70, 80 bucks off. It's right now trading at 1990.43. Silver at 24.96. The key thing is silver's closed above that critical support level of 24.50 now for a couple of straight weeks. Gold has been hovering around that very key $2,000 resistance line. It becomes support when it stays above it. And I think the next big news, maybe First Republic crashing, is going to pop gold into a new all-time high. The next big economic news that we get, if it's negative, is going to put gold at an all-time new high. I'm calling that now. Some more news. There's problems in the BRICS initiative and the Belt and Road Initiative, ladies and gentlemen. The first G7 Belt and Road signatory, Italy, is mulling a pullout. Why is Italy coming out of the biggest trade agreement ever made in the world? According to Bloomberg, it says Meloni, the right-wing leader who came to power less than a year ago, is leaning toward pulling out of an agreement to join China's controversial Belt and Road Initiative, which has funded $900 billion in infrastructure projects globally, according to people familiar with the government's thinking. Italian officials raised the prospect of withdrawal in talks with Taiwan this week. Bloomberg reported Meloni has previously been on record in 2019 as calling the BRI a big mistake. This could be a huge blow to Beijing, given Italy had been the very first G7 country that became a part of the controversial Chinese initiative, crucial to Chairman Xi's vision for a Chinese global expansion. According to analysts cited in the initial Bloomberg report, Italy is stuck between a rock and a hard place, and what to do with the cooperation pact is a real diplomatic conundrum for Meloni. Francesca Giretti, an analyst at the Mercator Institute for China Studies research company, said in an interview, renewing it would send a very difficult message to Washington, but not renewing it would put a strain on relations with China. So we don't know if more nations are going to mull that, but as the US and China blocks continue to sort of form, it looks as though there may be a little bit of weaknesses in China's trading bloc. Why could that be? Well, I have a potential suggestion for you. Recently, there was a tanker, I think it was an Iranian tanker, that got stolen, oil tanker that got stolen. And the Americans basically turned the other way and said, we're not going to do anything about that. I think the US now, because we're mostly energy independent and exporting a lot of energy, technically don't need a lot of the OPEC output our trading partners do. So we've protected that for our trading partners. But as the U.S. comes under fiscal and geopolitical strain, it doesn't look like, and this is a second oil shipment that's been pirated that the U.S. has done nothing about. It doesn't look like the Americans are going to be doing as much patrolling with their Blue Water Navy. China doesn't have a strong Blue Water Navy. So you could start to see some cracks in that Belt and Road Initiative, because that Belt and Road Initiative depends upon U.S. support of shipping lanes. U.S. has the biggest Navy. If the U.S. is not going to support that, the China plan could come under a little bit of pressure. We'll continue to follow that. Last story for the week before we get into the gold and silver, actually two more. San Francisco Target, the store, places entire aisles behind security glass among a crisis. And I'm going to show you a picture of that. It's really interesting. It's out on Twitter. And essentially in San Francisco, Target's basically saying, you know, we can't deal with this. And this is what they've got. You can see in the video everything of any values put behind these lockable security cabinets because of all the crime that they've had. And like this entire section is here. So anything that typically gets stolen, a lot of your hair care and sort of higher end, higher margin products that may get stolen. People put in their coat pocket, razors, things like that. Anything of a really big value that people are going to want is now being put in these glass cases. And we've seen this reaction in places where we've had a lot of protesting or just general economic malaise. I think most of that is because the economy is struggling. People need things. They're going to get things any way that they can. And retail outlets now are having to up their security. I've seen this in Walmarts near me as well, where they've been walling off cases like that. I've also seen Walmarts put, the barriers for people to come in with greeters looking what's coming in and out. So definitely Target's not the only one. And that definitely is a sign of the times when you have people breaking in, and we've seen that, on the West Coast and some of those cities that have higher economic issues and have had that writing. We've seen people break into stores and take things. And a lot of the laws written out there are such that, if it's under a certain amount, let it go. You're not going to be able to prosecute. So it's kind of allowed a lot of that to proliferate. And I think maybe some of that may be coming to our economy as well. Certainly we'll be covering that. Now, last story before we get into gold and silver: attack on the Canadian economy. Vancouver grain export terminal hit with a strike. So there is a strike now with the public workers at a grain terminal in Canada because they're not getting paid enough. According to a news release by wheat growers, striking federal workers have intentionally targeted the Cascadia terminal in Vancouver, which indicates grain exports can't be exported and farmers don't get paid if the grain isn't sold. A quote from the article: a strike is one thing, but to intentionally target a port that is critical to the lives of grain farmers and to the entire Canadian economy is the height of reckless irresponsibility, wheat growers president Gunter Joachim said about the labor action. Joachim continued, it's time for the federal government to intervene. The wheat growers are calling on the federal government to immediately amend the Canada Grain Act to authorize third-party weighing and inspection of vessels leaving Canadian waters. Let's get the grain moving and protect our sector. A lot is going on in Canada. There was also the heist of 22 million of gold out of Pearson Airport, also in Vancouver. A lot of gold flows in and out of that airport because a lot of the miners are based in Canada, and there's a lot of production in Canada and the northern United States that goes out of Pearson Airport terminal. $22 million of gold was stolen in the last week. It's the biggest heist ever out of Pearson terminal. The second biggest was 3 million back, I believe, in 1952. Big news coming out of Canada with the strike and with the gold seizure. Now we're going to get into the gold and silver data. As usual, we go over to CME Group to look at it. We've seen a little bit of frothiness in the overall open interest in gold. It's ticked up towards the end of April as people move positions. It looks like people are flying out of the June contract to the tune of 5,000 net contracts yesterday and into August. So we're going to get some more interest in August, and eventually it will build up to December as well. You can see that in the data. EFP, again, blowout numbers, 3,497 contracts. And this is on Thursday's data. So yesterday, almost 3,500 contracts of gold went over to London to gain access to the physical markets. Because why? There's not enough open interest on the April contract to do it. To get delivery in COMEX, you got to do it in the current contract, in the current month, delivery month. Not enough contracts to deliver 3,497 contracts. All that could be delivered were delivered. You saw 405 contracts. All were delivered, and this is late. This is late April. It's abnormal for the end of a not big delivery month on the COMEX and gold for the last contracts to be delivered at the very end of the month before the next big delivery month on one of those light months. People want the gold. I'm telling you right now, gold is flying off the shelves. What they can get in the near term on COMEX now, what they can get exposure to London later, they're doing it. And you see it just throughout the data. We go back, 6,180 contracts on Wednesday's data went to London and only 154 were delivered. Tuesday's data, 4738 went to London to get that physical, under 114 delivered because April's not a big delivery month. You can deliver in every month on COMEX if they're willing participants, but only 6 are typically big for gold and silver, and they're different for gold and silver. December is always a common one, some other ones. But yeah, that's how you get delivery off of the big industrial markets. Looking at the settlement data to look at price action. I love doing this on Friday because we get the current settlement data up until about noon 31, so about 10 minutes ago. We can see what's actually going on. Now the dominant month in gold is still June here. You can see interest of the day before on Thursday is 378,000 contracts. Today, so far, 155. We're just getting started. Closing up about a dime to 1991.10 is the dominant price and the trading there. So a little bit of positivity to end the week. Let's see what happened on Thursday. Oh, we were up $3 Thursday on 203,000 contracts. And let's see what happened on Wednesday. It was a little schizophrenic. We were up, we're down. We're down $8 on Wednesday. Overall for the week, not too bad in gold. And we'll get to the rest of the gold data here in a moment. We're going to switch over to silver. This is silver, the Globex code SIN3. On this market, you can see a lot of interest in silver. Silver right now, people need it, industrial and investment. And this is symbolic of investment demand coming back in because it's always an industrial heavy metal. But when you see investment demand coming gold, and you see the EFPs that we have said, people getting their gold wherever they can, you're going to start to see it in silver. And man, are they taking delivery? Not a lot of deliveries in the current month, but you've seen some EFPs show up. 250 for the May contract, 762 for July. July is now the dominant trading contract. You've seen that in Thursday's data. Ooh, we got to go back. Love all of these drop-down menus that constantly change as you scroll on the website. New website technology actually makes it harder sometimes. So EFPs for silver for yesterday in the May contract, 2090 go over to London, 325. So again, you can see that pull forward delivery from other markets where they're not getting it in these light delivery months here in the US, and that's how that works. But still strong physical demand, and that's how you can tell. And so if we go and look at the pricing data, this is as of 12:30 Central Time, about 15 minutes ago on the silver market. Trading up on the dominant contract, you can see here is July. Just simply look at the estimated volume numbers. 40,460 contracts traded today already, up 17 cents to 25,226. That's not the ending numbers for today. We got a few hours left before that's tabulated. But if we look at the closing numbers for yesterday, it is 70,000 contracts traded, up 13.8 cents, almost 14 cents to 25,209. That is the price action. Going to the ETF data, we've seen a lot, and the COMEX data. We're going to look at COMEX. We've seen a lot of gold flow back on the COMEX the last 4 weeks. This has been a trend the last couple of months. People are putting gold back on a COMEX. Now, if we go look at GLD, which is the proxy for the London market, we've seen a little bit of gold come onto here. Seen a little bit of uptick. So as prices have risen, naturally, we've seen some free floating inventory come back into the ETF market, most of which is housed in London, and also come back into the COMEX market. You can see it in the numbers. We're all green here for the last 4 weeks in gold, and that's because we have higher prices. When you have higher prices, it draws them out. Now, you're not seeing tremendous amounts of gold come back in. This is silver squeeze from a couple of years ago, couple of months. There was a drain in gold. We've had a little bit more come in, but it's nothing like what was been taken out. So even though we're seeing some come back in, that's because higher prices. But the higher prices are not pulling in just thousands of tons or anything like that in gold, and either in silver. Silver has actually been flowing out. It's so industrial. I don't care what happens to the price of silver. I think we're always going to use it no matter what happens to the price. It could go to $1,000 an ounce, and we're still going to have to use some of it for industry before it comes back, regardless of price, because it's still going to have our cell phones and medical stuff and, and missiles, and you need it. You're just going to pay higher prices. So silver is a lot less, it's more elastic in price before you get a breakage in demand in the silver market. And that's why it's flying off the shelves. And you see all the red here. You see the red both in the ETF market, mostly in London, some in New York, and then the COMEX, which is in the US. Red all over the place in silver. And silver had ticked up here in terms of flowing into the big ETFs. And you can see it's just ticked right back down. So it had a little bit tick up and then right back down. Now you see in valuation has gone up. That's because silver price has gone up. But in actual ounces held, it's gone down since silver squeeze. Had a little bit of an uptick, but there's not as much free silver in the economy, which is why even though we have higher prices, you're not going to see as much flow back onto the exchanges. Silver's more industrial. People want to use it in industry more, but you're seeing that investment demand come into gold and silver to grab that gold and silver out of London, to grab what it can. They're pulling forward demand in gold and silver physically on the Western markets. Of course, in last week's video, we looked at Shanghai and how incredibly frothy that's got and how intense that market's been, and the anecdotal evidence that people want arsenal gold and they're forming an ETF around it. A lot of that is around Africa, the Middle East, and other places around the world. Literally everywhere around the world, whether it be an ETF or direct demand, people want gold. They want gold, they want gold, they want gold, they want gold, and it keeps coming. The demand since the bank failures has been off the charts, okay? And so if you're interested in gold, it's only going to get more expensive. It'll have its down days, but it ain't staying down for any length of time. The physical market is robust. It is incredibly healthy, and the derivative markets are going to notice that, and the prices are going to start to rise. And the only thing keeping gold from reaching a brand new all-time high and shooting right through it and taking silver way past 30 to 35 is going to be another bank failure. First Republic's going into receivership. Next week, we may learn that that's come to fruition, and I can guarantee you right there that will have a spike in gold. Now, First Republic It's not the biggest bank to fail, but it's a continuation of the banking issues. And I think people realize that's what's going on. That's why people are coming to me to look at these big gold purchases. Not only the retail that demand that we normally get through our channels, I'm getting heavy industrial and heavy investment demand, hedge fund investment demands coming through to the tune of $100+ million. People are making phone calls to me for that. So very frothy market, very strong market. If you're interested in buying gold and silver, I'm not your financial advisor. Go consult your financial advisor. Do your own research. This is not financial advice. But if you're interested in gold and silver, now may be the time, because I see that market really spinning up really hard and fast for the rest of 2023 and potentially into 2024 as well. We'll continue to cover that here every week on the Weekly Market Wrap, along with the news of the week, along with the economic data, so that you know what's going on. This is a 15 to 22 minute video every week that tells you what's going on. You're going to get the synopsis right here. It's in video format as you're watching it. And if you subscribe to our podcast on all the popular podcast platforms, you can get this while you're driving or while you're jogging in audio form as well. Thank you guys so much for this. Have a wonderful and blessed weekend. We'll be back next week. It'll be May. Can you believe it? We're already a third of the way through the year. It's been exciting times. We got more coming. Let's do it, guys. Stay tuned to this channel where we'll do more additional coverage for you. Once again, this is Rob Kientz with GoldSilverPros.com.
Hey, thanks for watching. We selected these videos just for you. Check them out. And remember, $4.99 a month keeps the lights on and the channel going. So join our Gold Silver Pro supporter membership. We appreciate your support. Keep stacking.